Hello and welcome to the 20th edition of Exploring Enterprise, the podcast series from the Enterprise Research Centre. I'm Professor Stephen Roper, Director of the ERC, and today I'm joined by William Bain, Head of Trade Policy at the British Chambers of Commerce, Jun Du, who's Director of the Centre for Business Prosperity at Aston, and Professor of Economics at Aston Business School, and Eugenie Golubova, who's a Research Fellow and my colleague here at the ERC. And Eugenie has been working together with me and Joan on a project for the Department of Business and Trade on trade decisions recently. And we'll hear a little bit more about that project later. Today, we're going to be reflecting on the range of issues associated with small businesses and exporting. So, Joan, I think we're going to start with you. Much of your research at Aston has been concerned with what drives growth and productivity and the dynamics of international trade. Can you tell us firstly why trade is so important for business and for the wider economy?
Thanks, Steve. Thank you for having me. Trade is essential for many reasons. There's a long list of benefits. But I guess at the core, trade is essential for business and economic growth because it expands markets, allowing business to reach more customers globally, which boosts sales and profitability. It also promotes efficient resource allocation, so we don't need to produce everything by ourselves. And this enables countries, industries, regions, and firms to specialize in what they do best. Therefore, they can trade it to each other, and that would enhance productivity. It also creates jobs, diversify risks, and benefit consumers because it provides more choices and cheaper price. Given that most countries don't produce everything, exporting potentially is hugely important for keeping the supply chains functional, efficient, and resilient. And furthermore, one of the most important reasons, which is not very talked often, is the opportunity to learn. Exports provides opportunity to innovate for companies because they're exposed to international market and can learn from the best practice. Therefore, it is a conduit to knowledge dissemination and knowledge spillover. And one last point is that all these were leading to firms to do better, to innovate, adapt to changes. Therefore, it's essential for business dynamisms.
Many businesses have been through quite difficult times, John, over the last couple of years with Brexit, the pandemic, the cost of doing business crisis, the sort of war in Ukraine and the kind of cost pressures that that's brought. You've done, I know, quite a lot of work on how this has affected trade patterns and trade trends among smaller firms in the UK in particular. Tell us a little bit about what that story tells us over the last few years about how firms have fared in that trade, in trade and exporting.
Well, COVID has been a very big hit for all exporters throughout the world. So there's global decline of trade during 2020, 2021. So that has been kind of a common shock for everyone. But it also bounced back quite swiftly towards the end of 2020 and beginning of 2021. So as a result, we saw a big, strong growth in 2020 over many countries. And although it slowed down a little bit in 2023, we do expect it grows again in 2024. That said, the strong growth and recovery in trade, especially goods, during 2021 and 2022 was not quite a feature for the UK firms. So when we looked at the kind of growth in exports over the 3-year period between 2019 to 2022, we saw that on average, global trade in goods has grown almost 30%, but that for the UK was nearly zero. So why is that? If the pandemic was the only reason to cause the decline, the UK should follow more or less similar paths with other peers, but it wasn't the case. We think Brexit has played a big part of the poor trade performance, especially trade in commodities. Now, it must be noted that completely separating the effect of COVID and Brexit is a high demanding task, if at all possible, to do it cleanly. But using advanced modeling technique and estimation, we can draw some preliminary conclusions. In CBP and ERC, we have been doing research to follow up the trade trend. and estimate the causal effect of introduction of EU and UK trade and cooperation agreement. We followed the 6 months period, 9 months period, 15 months period. Now we are estimating the 36 months, the full 3 years after the introduction of TCA. What we can say is that there has been a strong negative, large, and statistically significant and quite robust estimate of the negative effect of TCA. The last estimate of 18 months after the January 2021, we saw on average there's 26% of exports decline compared to the scenario where if Brexit didn't happen. So we find this gap is not really closing. When we look at a 3-year period, we see no sign of recovery. So therefore, on average, Brexit has really damaged UK trade.
William, you're working closely with a lot of companies through the Chambers of Commerce. I wonder whether you could tell us a little bit first about actually what the Chamber of Commerce does and how it works with companies, and then maybe come to John's point about whether the experience of the companies that you're working with reflects this negative impact of the sort of changing trade conditions over the last couple of years.
Well, we're comprised of 52 chambers of commerce across the UK and about 79 British chambers in overseas markets. So broadly, there's around 50 to 60,000 SMEs in membership of those 52 chambers. So we represent to governments and to other stakeholders the collective views of the chambers network and the policy positions that we derive from those collective views, and also some survey evidence. In terms of our most recent trade confidence outlook, so this was for the first quarter of this year, again, most SME exporters who responded to the survey, 53%, said they were not seeing any change in overseas sales, so no growth. 23% reporting a decrease. 24% saw their overseas sales rise. So what we've seen really over quite a long period of around 4 years is that SME exports have consistently underperformed in comparison with domestic sales. And of course, if you look at specifically those businesses which are trading with the European Union, then 60% tell us, this was last summer, that they were finding it more difficult to trade with EU customers than they had a year ago. So that reflects that, the impact of the new trading arrangements is not just what happened in the early days of 2021, but it is new regulatory divergence which is occurring, which is also impacting on business costs for exports.
So are the difficulties in trading with Europe really around the costs of doing that, or the practicalities of, the sort of logistic type difficulties that we hear with, with trucks and verification and things like this? I mean, I think John's work really suggests that the TCA rules have probably increased the costs of that trade. But it would be interesting to kind of get your sense of whether it's more of a practical issue or more of a kind of cost-related issue for many small companies.
It's both, and it's also about time and capacity within companies as well. So some companies have found it, frankly, too difficult to comply with the additional red tape burdens, and they've stopped exporting to the EU. Some companies persevere, but find it's a constraint in terms of other things they could be doing to grow their firm with all this additional compliance work that they've got to do. So really, there are both, and I think what businesses really want to see are pragmatic but sensible changes, whether it's agri-food exporters, whether it's services companies looking for just a bit more flexibility in what their staff can do when they're visiting the other market, whether it's action on energy and packaging. just to make sure that we keep the costs down for exporters as low as possible, particularly with our largest trading market, the EU.
Thanks, William. That's really helpful, and try and get a sense of the sort of environmental pressures on companies as they consider the exports. Eugenie, let's come to you. You've been working on a project working with the Department of Business and Trade to try to help them understand a little bit more the kind of factors which drive trade decisions in different sorts of companies. Can you tell us a little bit more about the project and some of the things that are kind of coming out of that?
Yes, of course, Steve. And it's great to be here with the rest of the experts on this panel. So what we know from the expansive evidence is that a number of business characteristics are related to the different export decisions for companies. So namely size, age, productivity, whether the firm performs R&D or innovation activities. But of course, for policy research and business support, the interesting factors are those related to how and why businesses make different export decisions and who makes those decisions within the firms. And here, the literature is not as expansive, as well as the evidence is fairly fragmented. So even when we have evidence about different types of firms and perceptions or motivations that firms have, they tend to be measuring different things. So it was one of those research gaps that we, together with the Department of Business and Trade, aim to answer in terms of how actually the firms make different decisions. And
so Eugenie, let's take the kind of challenges that William was talking about and John was talking about a little before. How are these kind of cost challenges? How are these regulatory challenges? Where in the decision process are those getting incorporated by small and medium-sized companies? Mm-hmm. Are they just complete barriers to exporting, or are firms sort of thinking about the cost benefit of of exporting to these markets, or are they continuing to export but less? What's the sort of decision criteria that their firms are using here? How are they shaping those decisions?
Mm-hmm. So in our study, Steve, we focused entirely on the exporters. So that would have been companies that have been exporting at least in any of the years in the 5 years. So what we also looked as a different type of exporters. So those who started exporting in the last 5 years, new exporters, those who have continuously exporting, persistent exporters, and those who had a pattern of exiting and re-entering the export market, or intermittent exporters. So for new exporters and intermittent exporters, compliance, export documentation, anything regulatory, was one of the most common considerations for them that they took into account before they started or before they restarted exporting. So by far, one of the most common things that the companies had to do. And of course, because the compliance costs and information costs when it came to Brexit increased, that also would have been reflected on the firms that had to take that step into consideration. We also know from our study that among the companies that sought advice or information on exports, when they told us of the usefulness of that advice, they did also focus on different types of information provided. And very often that was related to specifically documentation and export compliance, also with regard to Brexit. So it is definitely one of the tension points, perhaps, that the firms have been facing, that they always have to face with exports, but in particularly due to Brexit, that added additional challenges.
So, John, I'll come to you just for a minute. William talked about the particular challenges that there have been in continuing to export to European markets and expanding exports to European markets. Do we know whether that's led to any sort of reorientation of smaller companies or even larger companies, I suppose, towards more global markets? How's that worked out in terms of business strategies over the last so thinking about the UK's kind of export footprint?
So far, the effect of TCE at the firm level is really scarce. So what we think, the evidence we gather are from the aggregated product level. One of the most noteworthy finding we think is really important is the loss of a variety of goods traded. So So if you think about the variety of goods traded, we are here counting, for example, skimmed milk exported to France is one variety, and then you have the same product estimated to another country that will be different product, a different variety. And what we're seeing here is that where the UK has lost about between 20 to 40% of variety of goods all traded since the TCA. Then now we think that's hugely relevant with small business. And why is that? That's mainly because small firms, as we all know, are very limited with resources and information. And they are, on average, evidence is there, they are less productive than large firms. So when this kind of shock or indeed uncertainty happen, firms have to limit their attention and resources on the limited variety. So we think most of this variety loss are really due to small business dropping out of that export market. For those who continue, they could have diverted to non-EU markets, which we see some emerging evidence that might be the case. But most of the firms probably have stopped exporting altogether, or just bear the reduced profit margin, which is not good for survival.
So, William, is this a pattern that you see in your data too, that for smaller firms, they're sort of focusing their export market presence on the key products, and so that sort of maybe stopping exporting those products which were more marginal, products or services which were more marginal. So they're concentrating on a narrower portfolio of products because they minimize costs, I suppose, that way.
Yes, very much. And the considerations that companies have to reach is whether the margin and profit that they can make on the sales of particular goods outweigh the compliance costs of having to deal with all of the regulatory issues. And I mean, it's important to remember that, you know, if you sell pharmaceuticals, there are particular kinds of authorizations which you need to have. Chemicals is another area. As we know, foodstuffs, particularly those of plant origin and animal origin, involve different considerations and certification and costs as well. So the issue is, of course, that the compliance costs depend on the goods. There are the only basic things which you would have to deal with are around customs, safety and security certificates, import VAT on goods that you're sending. But on top of that can be a whole panoply of regulatory compliance costs, just depending on the product. And, we're also not dealing just with a static picture. We've got new EU regulations that will have impact on UK exporters. The deforestation regulation, for example, will impact upon those selling chocolate products into the European Union. So, as I say, there are things being added as the European Parliament and other institutions continue their own legislative activities.
So we've talked a little bit about, thank you, we've talked a little bit about some of the barriers to exporting, and I'd like to move on to think a little bit about what are the enablers and what policy supports we do and could offer to exporters. William, I mean, you're probably most familiar with the sort of ecosystem here of support. So could you give us a little bit of an overview about the kinds of support that are available to firms in the UK? I suppose some of that's from the Chamber and other organisations as well. And then we'll come to gaps, perhaps, to think a little bit about how that system might be developed in the future, in a minute.
Well, I mean, chambers have enormous convening power in terms of their local areas. They have membership, which is largely defined by the place that the companies are and operate within. So there is a great tie-up between chambers and local economic activity and local economic specialisms. So that is a really important part of any export architecture for any country. We build activities on top of that, whether that's webinars, roundtables, conferences. So, again, that gives additional fora to share best practice. I think the biggest issue and an area still where more needs to be done is to really provide an integrated end-to-end service between those companies on the ground which are curious or interested in exporting and potential customers and clients in the target country and market. There still needs to be a lot of work done to improve those aspects. Right. When various parts of the Brexit deals came in, government introduced a few schemes. So for Northern Ireland, there is a specific scheme called TSS, Traders Support Service. In terms of exports from Great Britain to the rest of the world, with a focus on European Union, they introduced something called the Export Support Service, ESS, which was originally a kind of phone line triage service where you could ring in and someone would, in a sense, call you back. We've shifted more to a kind of an online mode of advising people. So, it's okay as far as it goes, but I think the issue is it doesn't provide the full bespoke service that particularly small companies who are beginning their export journey really do need in terms of getting the practical advice and the client base to make this a reality.
So, John, how does that square with your own sort of understanding of how the UK supports its smaller exporters particularly?
I think from what I have learned and experienced working with DBT and DBT local in Midlands team, my impression is that their export services is actually very good. For the kind of support they offer for business, especially the exporting firms which performed in the past, because they have a certain threshold to be considered, have to receive the intensive kind of support. The support is very good. I think the issue is that the coverage is very limited, simply because the resources are limited. So for a lot of small firms, both if you think about the firms which have the potential to export, but they haven't really thought about it and designed the exporting as part of this business strategy, and those firms who have tried initially but had some challenging difficulties and actually stopped trying, or being retreat from the export market, the support is actually absent. So I think, if anything, if resources can be made available, that part of support is really needed and could be kind of productive. But more broadly, I think it's in any economy, if we count on governments to support the whole cause, it will be a long shot. So a lot of this support has to come from the business organizations like British Chambers of Commerce, like FSB, like business organization, and even the ecosystem within regions as business self-organized ecosystem. I think that can spill over a lot of information, knowledge, and experience, and that would help.
Thanks, Jen. Eugenie, I know business support and business networks were part of the study that you did. Did those prove to be influential or important, do you think, in making firms' decisions in the way that John's sort of suggesting?
Yes, absolutely, Steve. Actually, it is one of the probably key findings we had in our study, which encompassed a large-scale representative survey of exporters. So they had different types of networks and business networks within UK, as well as in their overseas export markets. And a smaller share of exporters, also about less than 50%, also have personal connections to overseas markets of different kind, for instance, in terms of friends or family. Always different type of business of network, business and personal, but which the most common ones are actually trade professional networks or peer networks at trade associations. Over a half of exporters do tend to say that these different networks have had an impact on their various export decisions, which includes decisions to also start exporting and restart exporting, as well as continuously export and do different take different exporting decisions when sustaining presence in the export markets. So the impact is definitely there. And when we delved in our study into what is it exactly about those different networks that helps the exporters, they do tend to highlight especially different types of knowledge and information and advice sharing that is instrumental when it comes to even starting into exporting into different into the new countries and the new markets, as well as continuing to expand and overcoming those different barriers within those information barriers, particularly in those overseas markets.
Thanks, Eugenie. So we're nearly at time, but I wanted just to look forward a little bit. We're recording this podcast the day after the announcement of the general election in July. William, I wonder what sort of messages BCC are giving to any new government about the kinds of developments that they would like to see in terms of sort of thinking about business support for exporters. Are there one or two things that are your kind of key agenda items for a new government coming into this space?
Well, in terms of sort of trade, I think the key ask that we will likely set out, we published a series of sort of election manifesto documents. Our Global Britain Challenge document was one of those on trade. So what we're saying is we think the greatest economic bang for Britain's buck is really obtained from focusing on strengthening our European neighbourhood trading relationships. So those with the EU, those with Switzerland, Turkey, principally. There is a pipeline of trade negotiations which is still to be completed. We think those should be completed. But as resources allow and as deals are finalised and come out of the negotiation pipeline, we think there is scope to put potentially increased capacity into ensuring the utilisation of those deals is optimal for SMEs, because again, that's where we get the biggest impact in terms of trade growth and economic impacts as well. So those will be the key things. We know resources are going to be constrained, so clearly any government after the election will have to assess what can be done given a tight spending envelope across Whitehall. But clearly, I think in the next Parliament, we would see perhaps a slightly more emphasis from government on the implementation of trade deals to ensure that we get the highest level of preference usage by small businesses in particular that we can possibly get.
Thanks, William. John, I wanted just to focus on a slightly different angle of this, perhaps. William's talked very eloquently about how trade with Europe, with other partners, might be increased. But I wondered how we then maximise some of the advantages of trade that you were talking about before, through supply chains or through the links to productivity or innovation. Are there specific things that we should be aligning with the kind of trade policy that William was talking about to actually maximise those value-added benefits for the UK?
That's a good question, Steve. But if you allow me, I think I want to say a couple of things before we come to that. I think it's really important to get the upper structure right. That is trade policy. I thought about what we need to do in the foreseeable future in that space. I think there are three things. One is to remedy the damage. One is to take precautionary steps, and one is to rebuild competitiveness. First thing, remedy the damage. We know that in some sectors, for some kind of goods, the damage is just disproportionately higher than others. For example, agri-food. So this is the area that non-tariff measures has been most impactful, and a lot of evidence suggests that it's damaging. And we now have the evidence that was recently published in the public in terms of the benefit of potential veterinary agreements that might add to some of the remedy. So that is something we should think about and pursue. At the same time, we need to understand how the trade challenge in the past 4 years have actually changed the dynamics of supply chains. In some sectors, probably the influence of restructuring supply chains, and maybe there are domestic opportunities that have emerged and we don't know. So evidence needs to need to be collected and really to think about that. And at the same time, we need to help the firms which have difficulties. So this is remedying the damage. Take precautionary steps. There are some sectors which are hugely impacted potentially by trade policy, but at the same time, other dimensions, for example, technological changes, for example, the EV and automotive industries. Now we have 3 years delay of the implementing TCA really with the rule of origin side for automotive industry. But that threat is not gone away. So it will come back before you know it. So we should really think about the precautionary steps and really think about what's the future of automotive industry and what is the wave of electrification mean for a large number of supply chain business in that domain. And third of all, to rebuild competitiveness. Here is relevant was what you are asking me. A lot of the discussions are focusing on specific trade, but actually trade is just performance measure of all the other measures. Actually, before the capability, underneath the capability to trade is the productivity and innovative capacity. So more thoughts, more supports probably are even needed for basically boosting two things. One is the ambition for firms to trade. A lot of firms simply think it's too difficult, too challenging, it's nothing to do with my business. And so the ambition needs to be stepped in. And there's a whole lot of discussion we can talk about, how to boost that ambition. And then is the capability. Their resources and support and the peer influence can be introduced to help firms to become more productive by, for example, learning from the best practice from exporters. And there, the whole channels of learning by exporting will become quite relevant.
Thanks, Jen. That's super thoughtful, I think, and gives us a little bit of a sort of forward agenda, both sort of redressing some of the challenges of the last few years, but also then thinking about a little bit about the future. Eugenie, maybe we just end with you, and if there was, I don't know whether there was one or two things coming out of your project which sort of set a bit of an agenda for the future around trying to help people make more positive decisions about trade?
Definitely, Steve. I think one of the things that came out of the project was that we really need to have a good think of what we talk about, what we mean promoting exports and what kind of export decisions that we mean, because companies don't make just one big export decision. They make different ones at different points in their business journey, and it's a series of them. So the simplest way to think about it is that, are we talking about promoting first entry for the first type of companies to enter? Do we want to focus on the companies that are already exporting and making sure that they sustain that and increase those exports? Or are we also looking at the companies that might have exited at the moment or had a pattern of exiting exporting and making sure that they are becoming persistent exporters in the future? And even within these larger categories, there are a series of decisions that the companies make in terms of how do they export, what kind of entry mode, what market or which country they export, or do they increase their export sales by, for instance, expanding their product range, or the number of things that are, or the number of products that they export. So I think it is vital for the policy to, first of all, answer that question of what it is exactly we want to aim to achieve, and then target that support specifically.
Thanks, Eugenie. And that takes us into something which has been a bit of a theme of the conversation today around sectors, around the diversity of exporters, around the different problems that they face across different sort of sectors, and potentially, I suppose, different sorts of market profiles as well, whether it's Europe or the US, and the different challenges that they may pose. So thank you very much, everyone, for what's been a most thought-provoking and interesting discussion today. I think we've looked back a little bit and looked forward a little bit to probably what may be a more export-driven future, which is exciting. And I look forward to carrying on the conversation with each of you over the next few months. Thank you to all of those listening to the podcast too. If you've enjoyed it and are interested in finding out more about the ERC's work, visit our website at www.enterpriseresearch.ac.uk. There you'll find links to the Aston Centre for Business Prosperity and also the work of the British Chambers of Commerce. Thank you, everyone, and thanks for listening, and stay safe.